us to start with the second half of the program, which is a panel discussion on changed business environment, global expectation, and likely responses. The moderator for the panel discussion is Mr. Chandramowli Srinivasan, former CFO of SKF India Limited. Mr. Srinivasan was the finance director at SKF India Limited, and he was responsible for the overall finance accounting and reporting, treasury, taxation, legal and corporate governance functions of the company. Our first panelist for the evening is Mr. Robin Banerjee, the managing director of Caprihans India Limited. He has received several business awards, including the recent Rotary International Award for Ethical Business of the Year 2018 to 19. Our second panelist is Mr. Aymar, the Liedekerke Beaufort, the CEO of BNP Paribas India branch and the head of CIB India, BNP Paribas India. Mr. Aymar has more than 30 years of experience in banking across different sectors and geographies. Our third panelist is Mr. Hitendra Dave, the head global banking and markets of HSBC India. Mr. Dave is a postgraduate in business administration and holds a degree in economics from Delhi University. He is a member of Banks India Executive, Risk Management and Asset Liability Committee and HSBC Securities and Capital Market. Apart from the above panelists, may I request Mr. Sunil Mathur and Mr. Amit Nair to kindly join us. Ladies and gentlemen, if you have any questions, to please post your questions in the ask box, and the questions will be directed to our panelist. Mr. Srinivasan, I think we are good to go. So over to you, sir.
Thank you, Anvita. Good evening, ladies and gentlemen. A very warm welcome to all of you. I hope you are all keeping good health. We live in a constantly changing world. Changes that shape the way business is done globally, ranging from demographics and economics to technology and politics. We are living in a VUCA world. Change is the only constant. These are statements that we've heard often enough. Yet, this year, 2020, has defied all paradigms and hitherto held beliefs that we might have had about the nature, magnitude, and speed of such changes. Ironically, the year started on a very positive note with the signing of the first phase of the trade deal between USA and China, something that had been going on for months and maybe even a year, that had led to a lot of friction on the global trade front, posing of tariffs and counter tariffs by the two countries. And just when the world sat back and said, okay, we've got this out of the way now, came the COVID pandemic. The COVID pandemic is powerfully demonstrating the profound, wide-ranging, and long-lasting consequences that a disruptive event like this can have. However, COVID is not the only challenge facing business globally, though right now it seems to overpower practically everything else. So I thought that in this discussion, we will not talk so much about the COVID, which of course we will, but we will also look at some other challenges with the help of our esteemed panel. For me, it's a great honor to be the moderator of a panel that is consisting of such eminent professionals. My first question, which is to all the participants, so I would request each participant to give a very quick, short reply. The question is, business can never remain unaffected by political developments. Much as we may not like to link business with politics, it always is affected by geopolitical events. My question is therefore, do you think that the dynamics of global business will change as a result of the emergence of China as an economic powerhouse? Of course, the pandemic has changed a few of the feelings towards China in different countries. And therefore, the other part of the question is, do you think it will all go back to being as usual once the COVID crisis passes over? In any order we can go, but let me start the way I see the panel is sitting here. So may I first ask Mr. Sunil Mathur to comment on
that? Thank you very much for the question. I think, yes, a lot of things will change. There's no doubt about it. But the complications or the challenges between China and the rest of the world, indeed with the US as well, have only accentuated the fact that there is continuous disruption happening. Now, companies will therefore have to start taking a call on how they want to manage this disruption. For some companies, it may be less possible to do it because they are heavily invested in one or the other country, and closing a factory down just to set up something else somewhere else may not make financial sense. But I think the impact of this will probably be seen over the medium to long term as companies and industries begin to start developing alternate strategies. For example, manufacturing, which used to be bundled in one country or the other, may start getting smaller and much more decentralized, and getting closer to the customers. So yes, there will be impacts of this, but I think they will be more in the medium long term rather than in the next couple of months.
Thank you, sir. May I ask Mr. Aymar to comment?
Yes, good evening, everybody. I'm very happy to be here. It's a very difficult question because I believe that our friend in China have always a very long-term strategy. And I believe we are just in the middle of the game. And we know what they have done up to now, but we may have difficulties to understand exactly what is the final targets they are aiming for. And I remember discussing a few years ago when I started my stint in Vietnam, discussing with an American shoe company, and they were explaining me what was their strategy on the last 40 years. And they started manufacturing in Japan, and when Japan was too expensive, they moved to South Korea, then they moved to China, then they moved to Vietnam, and then suddenly they realized what exactly our friend from Siemens was saying, that maybe looking forward to the less costly place is not potentially the right strategy. And I believe somewhat in China, they have anticipated those kind of moves. And I think this is part of their strategy. I think today in China, they want to go up in the ladder of added value products. And they obviously will benefit from a very big internal market. But I believe the most important is what happened between US and China, what happened between China and Europe. I think the most important thing is indeed, and this has been mentioned by many people before, is the big wave of the way sustainability and resilience in the economy will be managed. And I believe that the way people are going to change their consumption pattern is even more important. And I believe that the circular economy will come much quicker than we think. And I think this will be the main trigger for China or for the rest of the world. So this trade battles and the way to change is potentially very interesting in the short term. But I think the big change will come through resilience, sustainability, circular economy, and on which people will be measured if they are successful or not. And maybe it's no more the net result and the turnover increasing. It might be many more KPI like ESG and others. Thank you.
Thank you very much. Mr. Amit, your comments?
I think there are two parts to it in my view. One part is the whole economic shift, which is happening because China is emerging as a big economic superpower, so to say. And the second piece is the technology shift, which is happening. I think we have to give it to, at some level, that over the last couple of decades or so, there has been a lot of innovation on the technology front, which has come out of China. Now, how does, to that extent, China becomes a very important cog in the whole broader wheel, how the world economics and the kind of the dynamics of the various businesses are moving. And I think that would be a very, very critical component to look out for, which is the rest of the world, and when I say rest of the world, I mean the major part of the world, is it very technologically dependent on China? And to that extent is not as self-sufficient, or either don't have the capabilities to produce similar technologies, or produce similar technologies that give the same efficiency gains, as well as the same outputs that a Chinese technology will give. So trying to decouple from that would be a very, very critical aspect to look out for over the next few years. And I think that's kind of where it will be interesting to see what happens in the medium to long term, which is where does the technology prowess move and the shift happens. We have clearly seen in the labor and the manufacturing markets, there have been, I think, as my co-panelists mentioned, that there have been shifts that have happened over the years between various countries, from China to Vietnam, and India has been a beneficiary of that to some extent. But I think the bigger trend for me would be where does the kind of the technology prowess shift happens, and where does that reside? And if each of the countries, or the kind of the big regions and the kind of the economies, are able to show, to borrow that phrase, resilience as well as self-sufficiency on that front.
Thank you, Amit. Hitendra?
Yeah, no, I think a lot of points covered, but I think I would just highlight one of the things that has happened as China has emerged in the way it has in the last 20 years. I think clearly it is responsible for the cost of capital collapsing the way it has, because it exported so much of deflation around the world, which forced central banks to do something with their interest rates. And then you had the financial crisis and the recent crisis. So I think one is that if China continues to do this or does not continue to do this, what happens to the cost of capital? Because the rates of interest that we have got used to in the last 15 years is due to a lot of factors. But in my mind, China has played an unrecognized role in that. I think a linked part is what China also did in terms of, because they have this massive ability to be the factory of the world, and therefore all the savings of the world are with them, and they exported those savings out. And again, with that liquidity, again bought sovereign bonds of a lot of countries, especially of US. So once again, I think these two parts, lower inflation and lower yields, and what happens if this changes, is I think worth of a very deep debate, because nothing like what China has done in the last 30 years has ever happened in a 30-year period otherwise. I think that's part one. I think on a go forward basis, what happens if things change? I guess the most important thing is the US elections, because we do know that will determine quite a bit how the two largest economies deal with each other actually. So I think that's the second part, but I think clearly the third thing is, China's middle class is now massive, and it's middle class by Western standards. So to the extent that China's emergence is not just good for, it actually is feeding all the luxury cars and luxury watches. And ask any of the luxury sellers of belts, watches, handbags. If China wasn't there, their business would more or less collapse, because the West is more or less accounted for, and India is too small, and India, Russia, etc. are too small. So yes, I think it's got a lot of implications, but it's still an evolving story in my view.
Thank you, Mr. Dave. Robin, your initial comments. Robin, you have to unmute yourself.
Thank you. I would like to talk about China in two ways. One is there are two issues and there are two outcomes, quick ones. The two issues are that China came into the world as a make or buy decision. Most of the companies in the world try to decide that because the China is a source, should I make it or should I source it from China? And therefore, the make or buy decision is what China brought into the world. And with it, the second issue which came is a risk management. That when I source material from China, do I enhance my risk? And in fact, there are organizations and companies in the world which built their business model based on imports from China. One of the largest mobile telephone manufacturer in India about 4 or 5 years back were all dependent upon Chinese imports, only to find out, and that was Micromax, only to find out that Livo and Vivo, the Chinese company themselves, are bringing goods into India and selling. So make or buy and risk management is what are the two issues which China brought into the picture. And therefore the businesses started recognizing these two issues. What are the two outcomes? The two outcomes, recent outcomes are, one is a Trump economics. The moment Mr. Trump started fighting China because of political reason, a lot of localization started taking place away from China. Most of them failed. Mr. Trump came into power saying that I am going to save the coal industry in USA, and that never got saved. It's where it was 5 years back in the same place, never worked. But this last one, the last outcome, the second outcome is the economics arising of pandemics, which is nothing else but reverse globalization. The countries have realized that they cannot depend upon one country, which is China, to source their material. And therefore, we have to do now reverse globalization into, again, localization. For example, India is the largest pharma manufacturing country in the world, only to realized that the APIs, which is the active pharma ingredients, which goes into tablets and capsules, 70% of that comes from China. So therefore, they started inventing or developing a business model which will enable India to make the APIs. So two issues, which is risk management and make or buy. But I think Mr. Trump and the pandemic has changed all our thoughts completely upside down. And we are all trying to reinvent ourselves, taking China into consideration, which will continue to be in the world, but in a different way.
Thank you, Robin, and thank you, the others. So I will come back to this reverse globalization topic or issue a little bit later. But as you all rightly said, China started off as being the manufacturing workshop for the world. And as long as that worked well for the advanced economies of the world, I think things were going okay. It's when that resulted in a trade imbalance, at least as far as USA is concerned, that became a political issue, maybe, to get jobs back into America, that this trend of protectionism and nationalism has started, plus the fact that China is also emerging as a very big technological power. And that's something I think that again caused the imbalance between at least USA and China. As long as they stuck to manufacturing, I guess it was okay. But when they became a technology leader as well, as was seen in the case what is happening with Huawei and 5G, etc., I think things started to take a little bit of a different stand. The COVID only accentuated it, but I'll come back to that. My next question is to Mr. Banerjee. Actually, it can be to anybody, but I've chosen Mr. Banerjee to answer this. Demographic changes are also happening in the world at the same time. The young population and a growing population in Asia, and an aging population in Europe for sure, and North America to some extent as well. Would this possibly mean a shift in the global center of gravity towards Asia? And if it does, how will that impact in future global trade and balance of trade?
This question is on demographics. And in the demographics, I would shift a little bit from Asia to India, because India is tom-tomming its huge demographic advantage. And I think that's what we are all celebrating, saying that India has a demographic advantage, and therefore we are the superpowers of the future. But let me give you just three figures. It will perhaps convince that this whole issue of demographic advantage is getting overplayed. The one of the threshold is 24 years and below age of people. And in 2011 census, people in India who are less than 24 years of age was 50%. Today, it's supposed to be around 45%. This figure, by 2036, is going to become 35% of the population, which means the young people, which was 50%, will become 35% from today. So we have 16 years to go from this to be shrinking from today. The second figure, the median age of India today, that is 2020, is 28 years. by 2036, 16 years from today, the median age of India will become 40, from 28 to 40. So young people are going to shrink, median age is going to go up. And the third one, the older people, the older population of the country today is around 8%. By 2036, it will become 16%, which means my view is India has a 16 years window, a short window to take advantage of the demographics. If you are looking at Asia, of course, China is aging, Japan is aging, US is aging as far as the Western world is concerned. So is India. We have a very short window. In order to take advantage of this demographics, we have to first and most importantly, improve the quality of our youngsters. I'm not getting into economics. That has to, of course, do with education, training, healthcare, and everything else. But unless we focus on this 16 years to take advantage, we would miss a bus. And unfortunately, this demographic advantage, we have a very short window to play with.
Thank you, Robin. I understand the 16-year window that you're talking about, but taking the global population, it's still going to shift heavily in terms of a young population towards Asia as compared to, say, the Europe and America. So in that sense, the consumerism is still 50%. It's expected that 50% to 60% of the global demand is going to be generated in between Asia and Africa. So the world is going to have to take cognizance of the fact that these are going to become superpowers, if not anything else, at least in terms of sheer consumption, and therefore some shift in the balance of or the gravity of the center of the world. But time will tell us where we go. My next question to Mr. Mathur: how are climate change and other such sustainability initiatives likely to affect the future of business models in your industry? Your company is a global technology powerhouse, of course, in automation, digitalization, energy systems, and mobility. And I think you're the perfect man to be able to answer the questions regarding climate change and other sustainability initiatives. How will they affect business?
Well, I think hugely, in a short form, hugely. If you look at the 3 or 4 major trends in the world, one of them you've just discussed, demographics. The other is urbanization, massive urbanization around the world. The third is climate change. And now you're having a disruptive fourth coming in, and that is digitalization. And I think issues of climate change, issues of water, clean water, environment in general, linked to social issues, human rights issues, child labor, etc., etc. Issues of compliance, governance, are now becoming so critical because for 2 reasons. This is not just because it is fashionable to do it, but it is now becoming an economic imperative to have a resilient and long-term sustainable company. You now have an index on the New York Stock Exchange, the Dow Jones Index on sustainability. Following the WorldCom and Enron and all these fiascos there, shareholders wanted to know, are these companies safe to invest in? And are these companies, there are funds today that say they will only invest in green technologies. There are funds, and just giving our own example as Siemens, we actually have carved out one of our largest businesses of energy and are moving away from coal towards greener areas of energy, because funds are turning around and saying we cannot necessarily, or we will not invest in brown coal. Now, so from a shareholder perspective and a stakeholder perspective, this is becoming actually a driver. The entire issue of climate change, the entire issue of social awareness, social responsibility is becoming a huge issue. And as I said earlier, I mean, companies do want to know, individuals do want to know. Funds, the first question that any banker will want to know when he does his due diligence of any company is how compliant is this company. The first due diligence that they do is what kind of a governance system do they have in place? And is this a company that I believe I can raise funds for and put money into? So I think climate change, the whole issue of sustainability, has now not become a fashionable requirement. It has become a business imperative for companies to attract funds, for companies to attract talent. The young talent today are not wanting to work for companies that are irresponsible, where they don't know what their ethical standards are, etc. The people today are wanting to work for companies that have a purpose and that are able to articulate that purpose. And I think, therefore, companies like ours are now being much more vocal about the purpose that we are in. We are not in the business of building trains. We are in the business of transporting people and goods, so that every part of the country is connected. We are in the purpose of ensuring that livelihoods actually are possible through connecting electricity to every single household in the country, that affordable healthcare can be made available to every individual in this country. Not about building buildings or smart buildings or building CAT scanners or X-ray machines. This is a purpose which is much higher. And I think companies are looking out for that purpose, because that is really what will attract talent, what will attract funds, and that demonstrates that they are responsible, which is actually the very foundation of being a sustainable and resilient company.
Thank you, Sunil. So it's no more just the top line and bottom line that matter. It's about what you do for society as a whole. There's a completely new stakeholder, equally important stakeholder that's been added. What you do for generations to come, what you do with planet Earth, etc. My next question is to Mr. Dave and Mr. Aymar, and Mr. Dave can go first. So how has your business reacted to the shocks caused by the COVID-19 pandemic? I could not keep COVID-19 out for too long. Do you see any of the changes I'm sure you must have had to make during this period of time becoming permanent in your business? So Hitendra first and then Mr. Aymar.
So I think the most difficult challenge for us has been to rely on sources of information which we cannot verify. Okay, so we are now, for example, for many of the people on this panel, I'm sure we have moved money or BNP has moved money using communication that we otherwise would never have, because it's not legal, right? It doesn't. So we are so the trust-based relationships have really come to the fore much more. And similarly, in terms of evaluating finances, similarly in terms of stock statements, factory visits, a whole bunch of things that make sure that when we have lent money, it is being used for the purposes that we had signed up for. We've had to set that aside and used proxies for that. And naturally, none of us had prepared for this in the manner that it has obviously panned out, and therefore it's tested our judgment and our commercial acumen quite a bit. I think I would say one thing, and time will tell. It's too early as a banker. It's too early for us to conclude that on both those parameters we have ticked the boxes or not, because the after effects will follow through when when the real picture comes out. I think that is one specific thing where we have seen a change. The other is obviously, and I think we had the earlier speaker talk about it. Earlier, digitization used to be by force. I would be visiting senior colleagues to say, it's 2020. Why are you giving me faxes? Why are you issuing checks? Why are you asking me to process your export documents, import documents? And yes, the senior people would nod, but leave it at that. Now, I think it's no longer by force. So we would actually force people to go digital by charging higher for manual, significantly higher. But now it's digitization by choice. I think boards have instructed their finance teams and treasury teams and business teams. None of this business of, the MDs in some other office, CFOs in some other office, the two cannot sign on a common piece of paper. Business cannot stop because of that. So I think the second change, this is going to be a societal change, but even definitely at a corporate and a bank level, digitization has come in much more. The third area is, how do you stay in touch? Ultimately, banking, like all businesses, I'm sure you have customers, you call on your customer and you ask him whether the product is good and his family's health is good. We also have to do so. And we've had to design new ways of staying in touch. And what we are doing right now is, I'm sure all of us have spent more time in looking at people's faces on screens than we had ever imagined. So I think staying in touch. And finally, I would say one of the things that I want to make sure that everybody registers here. For example, we have raised $20 billion of equity capital for people in 2020 so far. Okay, of that, only $2 billion was done pre-COVID. So it has also told us that you can have massive amounts of, equity raising is possibly the highest end of trust because it's perpetual debt in that sense. And yet people have gone through road shows and updates and research meetings, etc. It tells you that the finance world is a very, very flexible world. Okay, it moves very, very quickly. So to the large part, how much of that will change, how much of it will be dissipated? My guess is when, it's a function of when we actually start going back. So if it's 6 months, maybe not much of it will not remain. But if it's what looks like closer to a year plus, some things might become permanent. But I'll for the other part, I'll hand over to my friend there.
Yeah. Thank you, Hitendra. Aymar?
Yes, thank you. I will try to complete what my colleague from HSBC said, not to repeat, and I fully concur with what he said. I will be very pragmatic in my approach. I'm going to tell you that BNP Paribas was not prepared for this COVID crisis. And when we suddenly had to push 80%, 70% of our employees working from home, we had never planned for that. I can tell you that even in New York, it was 95% of the employees. And obviously not prepared means that because the bank is a place where we manage risk, mean that you have protocols, you have securities, and suddenly we had to change all that. We had to be very agile in the way we had to accommodate that. So working from home was not a scenario that we had in our plan. Even worse, I have to admit that the banking sector was accepted by the government in India as a very special sector, so we could still manage to have some people going to the office. But our administrative platform, which are based in India working for the rest of the world, they didn't have that chance. And they had exactly one night to move the whole team from our different offices from home. And here again, we were not prepared. And I'm absolutely amazed the way the Indian team showed their commitment and the way to be able to do that. So the question we have now in the bank like BNP Paribas, but I'm pretty sure it is the case of all banks and the one of my friend of HSBC, is the way we're going to adapt to this new world, the way we are going to manage our real estate footprints. And it comes back to what our friend from Siemens said, the costs, we are going to work on it. And definitely the real estate is going to be a lever that we are going to use because we don't need to have so many people in the office. And potentially, by the way, you have shifting. So it's even more the one who goes doesn't need to always be there, which, by the way, when Mr. Mathur said among the challenge we are facing in the world, he mentioned urbanization. But I wonder how much Ministry of Finance and Prime Minister of many countries, because working from home for all services will become more and more an important topic. They may not regulate that, and because any companies that have less people coming to the office in big cities, and it's less roads, less transport, less motorway, less metros that you have to build. So I think the change is also going to be how people are going to live their work. And you know, when you have big cities like New York, Hong Kong, and Singapore, where the real estate price is extremely high, you start to wonder, do I need to have 1,000 people in New York? And can those people live elsewhere? Because in fact, the job they do, they don't need to be compulsory in New York, Hong Kong, and Singapore. This is at the very early stage of those kind of thinking, but I think this is something we will see more and more. Obviously, it's true that people will be willing to keep cohesion, corporate culture. So that's why what I'm saying is not maybe going to happen in a few days, but the digital move that we have discussed so much, the mindset of people after COVID, who see this is possible, and we thought it was not possible. There is an acceleration here. For the rest, no, I would like to stop it here because I would like to give time to the others. Thank you.
Thank you very much. In fact, I'm actually extremely impressed by the fact that both of you all mentioned, and I'm sure the other panelists would agree, that no one of us was really fully ready for what happened. And yet, I must say the world has moved on. We have not seen any banking crisis. We have not seen people complaining that, I couldn't pay my bills because my bank wasn't able to pay me. For that matter, the entire economy, the world has moved on, albeit at a slower pace, but it has moved on. And I think it is the resilience of mankind, if I might be a little philosophical here, to say that we did manage to cope with this crisis, all of us put together. On a slightly different note, hearing what Aymar and Hitendra both, and maybe more Aymar saying about this might be the new normal. We might not need big offices, etc., etc., etc. Somebody remarked to me that the world's GDP has collapsed when people buy only what they need and not what they've been buying so far. In a way, GDP is the sum of everybody's incomes and expenses, but this pandemic has taught us that we can all live with much lesser. And I shudder a little bit to think that if everybody goes into this new way of working, real estate and others might not have as good days as they've had before. What would that do to the global economy? Because after all, the global economy depends on the multiplier effect of money going round and round and round. But that's a topic for another day. Let's see where it takes us. Which actually leads me to my next question to Robin. In emerging countries like India, with a very large young population and a low per capita income, how do you see the balance between new age technology like robotics, artificial intelligence, high-end automation on one hand, and the need for large-scale employment generation on the other hand? Do you think these two can coexist sustainably?
An extremely debatable question, because this has been perhaps debated, spoken, written, read, and talked about on new age technology and education and employment. I would like to give a little different take of that. Now, the take is like this, that if we talk about new age technology, we are talking about, let us say, Industrial Revolution 4.0. Now, when Industrial Revolution 1.0 took place, did employment come down? When 2.0 took place, did employment come down? And when 3.0 take place, did it come down? The answer is no. As the Industrial Revolutions kept on enhancing, including in Industrial Revolution 3.0, which is nothing else but the IT technology, the GDP per capita income went up, the GDP went up, the world started enjoying the fruits of technology. And this is no difference. Industrial Revolution 4.0 is no different, which is nothing else but IoT and iOS, which is industrial information, is of technology and of systems, Internet of Things and Internet of Systems. So there is no other difference. So therefore, I would quickly paint a picture on India, because that I think we all thinking that what will happen to this whole computerization, IoT, iOS to Indian employment. There are three broad concepts in so-called Industrial Revolution number 4.0. One is robotics. Robotics is going to come. Then is artificial intelligence, that's going to drive. And three, of course, the IoT, the Internet of Things. Robotics. Will robotics affect Indian employment? I think it's still 10 years away. The robotics is all about ROI, return on investment. When I bring in robot, I then substitute a man or person. In Europe, and Sunil is there, in America, it makes sense to substitute a human being because it's very expensive, $50,000, $60,000, $70,000 per annum. In India, in $50,000, $60,000, you can employ 20 people. So why should I invest in robotics? So I think robotics taking over Indian employment in the large, middle, and small scale sector is still years away. So I don't think we need to worry. Now come to artificial intelligence. Will artificial intelligence take away our jobs? Reverse, artificial intelligence will add to Indian jobs because India understands artificial intelligence. We are good in accounting, we are good in education, we understand technology. In fact, the AI of the world will be sourced from India. That's a great opportunity for us. And the same thing applies to IoT. Moment Internet of Things becomes more common in our homes, I come into the room and my IoT produces the music or the electricity or the energy. Where will it all be? Where will all be configured? Where will the software come from? India. Again, employment opportunity. I think we are not trying to look at the Industrial Revolution 4.0 from the angle where India as a whole employment will go up. Perhaps we will enter into employment of somebody else, but that I'm not too concerned as of now. So the good news is, I think it will be good for us.
Thank you, Robin. I think that was a wonderful way to say that finally economics will decide how far we go down the route of a particular technology. It's always a question of whether people are cheaper or whether a robot is cheaper. And I agree with you on the artificial intelligence, everything else that will make business even more possible to do more efficiently. I know that I'm a little pressure for time, so I will go to my penultimate question, and this is to Mr. Mathur. COVID-19 has increased the trend of growing nationalism to some extent. I think countries are, we had a speaker saying earlier also that countries are now looking inwards to say, can I protect my own people's jobs, etc. And countries are also looking to diversify supply chains with a China plus one strategy. Will this lead to the forging of new alliances, more bilateral trade agreements? And do you think India has what it takes to be considered a reliable partner in this new supply chain consolidation process?
So I'd like to delink this discussion from China. I think we don't need to get overly obsessed with China. I think India definitely has the potential to do much more than what we are doing today. And if I just take up from the discussion that Robin mentioned earlier, where we are saying that effectively India is already the software base of the world. If we can be the manufacturing base of the world, and you put the software and the manufacturing together, you've got a combination of Internet of Things, Industry 4.0 that nobody can beat. Now, what are we actually got to do to get there, right? And let's look at first the vision and then translate that down. If you look at the vision of the Prime Minister, he's talking about increasing the share of manufacturing from 15% of GDP to 25% of GDP. Now, GDP today, $3 trillion. If you talk 15%, you're talking $450 billion contribution to GDP. If you look at a 7% growth rate in a couple of years, you get from, say, 3 trillion to 5 trillion. Let's just say 5 trillion. 25% of 5 trillion is about 1.2 trillion. You're talking about roughly 800 billion or $1 trillion of contribution to GDP coming in through manufacturing. Now, if you're talking about 800 to $1 trillion contribution to GDP, flip that around and say, what does that mean in terms of CapEx? That means at least double that amount in terms of CapEx. So you're looking at $1.5 to $2 trillion of CapEx coming up in the short, medium term. How many countries currently around the world are looking at investing $1.5 trillion in CapEx? Not too many that I know about. So you're going to have the entire world coming in, looking at India as a potential market. And therefore, for India to stay competitive, we are going to have to adopt the latest digital technologies. Industry 4.0 is not here as a nice to have, it's going to become an imperative. Now, if we have to do that, and we have definitely the potential to do that, do we need to improve in certain areas? Absolutely. Do our labor laws need to be better? Absolutely. Do our land laws need to be better? Absolutely. Do we need a quicker ease of doing business? Absolutely. Do we need a better environment and let's say an overall regulatory environment to support that? Absolutely. But I think if we have all this, and there's no reason why we can't get our act together over there, if we are able to get our act together with the software brains that we already have demonstrated that we have, with the manufacturing expertise that we can get, there is absolutely no doubt, and with the population and the increasing number of Indians wanting to move into the middle class. You're talking about 350 million today, with a potential of that getting to 500 or 600 million over there, if not more. That is a huge market that we've got. So I think we've got all the building blocks in place. We have work to be done. We have work to do. But if we can get our act together, this is the window of opportunity. And I think many companies in India as well as abroad are looking at India very, very carefully. But we need to be cautious that our competition is not China. Our competition is Vietnam, Indonesia, Malaysia, and these countries in South America, because everybody has options to go if they decide to go out of China. And we need to concentrate not on being obsessed with what they are doing, but on getting our own act together and making sure that we can make India the most attractive location to come in.
Thank you, Sunil, for that optimistic note. In fact, as I keep telling my colleagues, China had a head start advantage over us of at least 20 to 25 years. And that's what they have used to build such a big base there that it has become extremely difficult for industries who have already set up there to think of moving out from there, despite the labor costs going up. The pandemic, in a way, has forced people to think of alternative supply chains just to de-risk themselves. And I think what you said is very right. India definitely has a chance to play in it, as you rightly say, in our own right, without thinking of China as a necessary competitor. But yes, there are other countries as well who are being considered by the Western world in order to think of de-risking themselves. Which brings me to my final question to all the participants. If you were to name one opportunity, and Sunil, you have already mentioned quite a few, so I will start with the others. If you have to name one opportunity that India must latch on to during this changing world order in order to make itself be counted, what would that be? Just one. So we start with Robin.
It's good to have just one option. And to me, that one option is agriculture sector, agri. Agriculture sector employs 40% of our labor force and generates, just to round up the number, 20% of our GDP. With this new agricultural policy, all this while, the agricultural sector was bottled. And now, to my mind, it's a new revolution we are going to see. In 1991, what we saw, now we will see in 2001, 2021, a new India. So one which the business community should latch on, which was not available to the corporate world, what was not available to the financing sector, is agriculture. We should look at that as our greatest opportunity for the future.
Thank you, Robin. I only hope our politicians are hearing. Aymar?
Well, one is always difficult because you want to say many, but I would like to come back to what Mr. Mathur said a few minutes ago, and I completely agree with him. As I said at the beginning, I'm coming from Vietnam. I've been in India for 10 months now, and I spent near Vietnam. And the way Vietnam has had a policy turning around, attracting investors, the way that, and I was in the European Chamber of Commerce, Vietnam and EU they have been able to sign an FTA agreement with EU is just amazing. Their targets is to attract the investors in Vietnam, and everybody is trying together, hand in hand, private sector, public sector, government. So the one thing I would wish is that India is organizing itself to welcome FDI, make life even easier of the one who want to invest, because long-term game, this will be very profitable for the country. So this is my big wish. And I hope in that case, India and EU may one day sign a free trade agreement. Thank you.
Thank you very much, Aymar. Hitendra?
Yeah, I was going to say actually FDI, but Aymar has stolen that from me. So,
sorry.
But I would say that I think I think let's just change tack a little bit. I think India, if it has aspirations to achieve, if we are to achieve any of the positive things that all of us wish for, and all of us have heard today from the panel, I think it's not going to happen unless our incomes really go up. Okay, I think India is a great story, but we've been a great story for quite some time. And at some stage, the story has to convert. The world has other options. We've spoken about world doesn't have other options just to manufacture. It's got other options in so many other ways. So if there is one area, I mean, maybe I'll just combine. I think just the average income of the average Indian, unless it starts growing at twice, thrice the rate of GDP, we will continue not to be the big market that people think about, because our middle class is more or less capped out. And the second thing, I think on the link note to what other panelists have spoken about, grab the manufacturing, change, become a competitor to Vietnam, Malaysia. But I think the number one thing there is that it's clearly not the old style manufacturing to my mind. It'll be now high new age technologies, electric vehicles, solar panels, so on and so forth. And which therefore, to Mr. Banerjee's point on agriculture, I think we need to have significantly higher commitment and investment in education, because what we need for the next 20, 30 years might be a much more different type of workforce, because the different types of industries are more like what you're trying to attract here. So between focus on income and education, I would leave that as my parting thought.
Thank you. And this is the only question on which, despite being a moderator, I would like to give my one view. And Sunil, you spoke a lot about need for reforms in different parts of the land reforms, the labor reforms, etc., etc. And I fully agree with you. And to me, the one thing that India needs to do to capture this opportunity is to have a consensus in the country. We are so torn apart on practically every issue. Agriculture is a great story. I cannot understand why a law that gives the farmer right to sell anywhere he wants, in addition to the existing selling that he's doing to the APMCs at the MSP, etc. When he's given an additional right, why does that become something on which we have to have strikes and all sorts of stuff? So it is, for me, if we can get our political consensus and our political climate correct, I think chance is waiting for us. The COVID has given us an opportunity to tap into this, and I just wish it would happen. On that note, I would like to thank all the panelists for an extremely interesting panel discussion. Are there any questions that have come from the audience? Anvita?
Sir, as of now, no questions.
Okay, so if there are no questions, then I would just like to conclude on an optimistic note by saying that mankind has endured and often surmounted various challenges thrown up in the past. Each such challenge has been taken as an opportunity for a new world order. A new way of doing things has always emerged. This time will likely be no different, as the world will, after the initial shocks, find a way to come out of this crisis. Hopefully, we have learned some lessons on the way, and we will come out with more sustainable, more inclusive development, which alone, I think, will lead to meaningful progress globally for all of mankind. Thank you all very much, and I hand it back to Anvita.
Thank you so much.
Thank you, Mr. Mole.
We have almost come to an end of the program. Let me just introduce you to Mr. Piyush Kaushik, the newly elected Vice President of the Chamber. Mr. Kaushik is the head of Healthcare Innovation Center Pune and Global Mobile Surgery Business Leader of Philips India Limited. He joined Philips in 2017. He holds Master of Technology from Indian Institute of Technology, Kharagpur, India, and Leadership Education from IMD, Switzerland. Mr. Kaushik, may I request you to kindly formally propose a word of thanks?
Sure. Thank you, Anvita. Well, I take really a proud moment to say thanks to everyone, especially the distinguished speaker over here, Sunil, Aymar, Robin, Hitendra, Amit. Really wonderful talk, and I also learned a lot from all of you. And just to highlight few of the things which come to my mind. For example, Robin talk about very crucial point about the age, the youngster age. That was a really great point to indicate that after 16 years, India will be at 40 years. So that's a really an eye-opening just to understand where we will be after 16 years. And of course, the make and buy and risk management, of course, improving the quality of youngsters. So these are few of them. Robin, you mentioned absolutely correct. Then Hitendra also talked about source of information and digitization by force. I think that's a crucial one to really learn that digitization is not an option now. We have to adopt that. That's become a forceful act. So that's something very important. Aymar talked about how we came out during this COVID period. Of course, I know Chandramowli was trying to avoid COVID, but the COVID had to come. And from that perspective, Aymar talked about how could they able to get 80 to 90 percent people working from home. And of course, Sunil, great input from you, Sunil, starting from how sustainability become agenda, social awareness, and of course, making Industry 4.0 is crucial for us, all of us, especially in India. And finally, I really appreciate Chandramowli, who took so many different topics. And thanks the topics other than COVID, like geopolitical, demographic, and opportunity for India. And that's where I really would like to thank you and really appreciate everyone for providing your inputs and definitely your ideas. Really appreciate all of them. And finally, I really would like to thank you, Ashok, who has been really a pioneer here. I can hear everyone, and he is the one who has helped me as well to understand what has this chamber has been doing, what are the priority in past, and what are the next challenges we have. So I'm looking forward to contribute, and of course with the help of Manish and Ashok with your guidance. So looking forward for that. And in the end, really would like to thank you everyone, those who have joined this today AGM, and all the speaker, listeners, and audience. Thank you very much. Back to you, Anvita.
Thank you so much, sir. Once again, I would like to thank all our attendees for being a part of our AG and joining us this evening. I hope you enjoyed the event. We would appreciate feedbacks from you about the event. I'd also like to thank all our dignitaries for joining us this evening.